Hello, everyone, and welcome to the Q2 results that we are going to cover here in this session today. My name is Barry Ellison. I'm the Director of Marketing and Communications at Peak. And to present the results for the second quarter, we have our CEO, Johnson Joseph, and we also have our CFO, Jean Landreville, who will be presenting the results. In terms of the format, it's very similar to our last session. If you had a chance to attend it, you'll see on your screen you do have a chat window, and you also have the question and answers window. We please ask that you put your questions within the Q&A section and not the chat. It just makes it easier for us to follow the questions. You can post a question at any point in time. We will be having a Q&A session once Johnson and Jean are finished presenting. So again, similar to the last session that we had, we will have the Q&A and go through as many questions as we can. We expect that this probably should last about around 30 minutes, this call. And it's obviously being recorded, and we're going to make that available after this presentation. We'll also have transcripts available as well with this session. And all the attendees are muted throughout this session as we are presenting and answering questions. And we would also, we'd like to thank you for attending this session. We have a record number of people registered and attending today. So it's very, very nice to see that. And with that, I believe I'll turn this over to Johnson.
Okay, thanks, Barry. Hello, everyone. Before I get started with the Q2 results, just wanted to address some concerns that were brought to my attention related to our Nasdaq listing. This is a session to discuss the second quarter results, so we're not planning on providing any specific information with the Nasdaq listing, but I just wanted to let everybody know that everything is okay. I know that I mentioned that we would be on Nasdaq, at least get the approval before the end of the month of August. It's not the end of the month of August yet, so we still have a day. Listen, in all seriousness, nothing to be concerned about. The second quarter results needed to be included by reference in what is called a Form 40F that we need to file with the Securities and Exchange Commission in the U.S. So, as you know, we only filed the second quarter results last Thursday evening. So, we're in a position right now to complete the 40F, which we will be submitting probably in the next couple of days if everything goes according to plan. And hopefully there is an announcement related to Nasdaq made before the end of this week. Just so you know, we are in the process right now of, printing T-shirts, preparing all kinds of paraphernalia to celebrate our entry on Nasdaq. So again, hoping that you'll be able to celebrate with us before the end of this week. And if you would like to have a T-shirt, then just send an email to Barry. Okay, that being said, let's get started with the second quarter results. I'm not going to go into the specifics of the results. I'll let Jean talk about some of the numbers at the end of my presentation. But what I wanted to do here today is basically just give you a quick overview of what fueled the growth in the second quarter. Obviously, from Q1 to Q2, we more than doubled our revenue. We showed a little bit of profit for the first time, which is nice, which was, I have to be honest, was a little bit unexpected. But we expect profitability to continue, obviously, going forward. Now, in terms of the second quarter results, there wasn't really anything, one single thing that could explain the growth, but it was just everything that we've been doing for the past few months that are starting to pay dividends now. Now, the distributor and retailer financing programs that we put together, we started those at the end of 2020. They're really starting to pick up right now. Specifically, we did a lot of business with distributors and retailers on JD.com for all kinds of products, mostly the packaged goods products. from the distributor that has the rights to COFCO products, right? For those who are not familiar, COFCO is China Oil and Foodstuff Corporation, and they are one of the largest food processing companies in all of Asia. They essentially feed China. Well, some people like to say that they feed China, right? So they produce rice, oil, and all kinds of edible products over there. So one of our distributors has been very, very active on JD.com selling COFCO products, and that was a huge boost to us in the second quarter. Also, there's 618. Obviously, we talked a little bit about that. This was our first year participating in 618. Very, very successful. That allowed us to attract also a lot of new clients to the Business Hub. Now, in terms of the Business Hub itself, I recently looked at the information on our website, and obviously the information needs to be updated. The hub has been growing. I believe that the information that's on there right now talks about 30-something thousand small businesses that are part of the hub, but the real number right now as I'm speaking to you is closer to 70,000. So we've more than doubled the number of businesses that are part of the hub. So that explains part of the growth as well. There's also the arrival of our ability to process payment fund transfers and settle payments with the relationship that we have with Wrong Bank Technology, which is a subsidiary of China UnionPay. So just the rumors before that even got into place, there are rumors circulating in China. People were inquiring, and that also attracted a lot of new clients to the hub. We started processing transactions. Everything went well. That also made a significant contribution, even though that came in the latter part of the second quarter. There's a lot of positive, I guess, hope for the future in terms of how quickly that aspect of our business will grow. Now, that explains in general terms the growth for the second quarter. I think we also mentioned that we're looking at opportunities in different sectors, supply chain sectors. We announced recently something with the steel industry. We're also looking at opportunities in the insurance industry, clean energy, petroleum sector. So there are a number of things that we started to put into place at the end of the second quarter that are going to pay dividends in the third quarter and in following quarters. So there were actually a few minor transactions, call it a pilot, that we did. We have not given any information publicly about that yet with regards to what we're doing with the petroleum industry and directly with PetroChina and some of their partners. I'm not at liberty to say the name of the international partner, but that will be disclosed in the coming weeks. So we are really more and more integrating the supply chain in China, different supply chains. We're talking food, electronics, consumer goods. Now we're talking about steel products, insurance, petroleum products, energy. So more and more, the hub is growing, and our name also is getting to be better known in the marketplace in China. Continuing to deal with some big partners that have a lot of brand equity. That's also something that we're going to continue to do, and that's going to be helpful to the company. Now, that being said, I'm going to turn it over to Jean, who is going to talk about some of the specifics related to the P&L and the balance sheet for Q2. Jean?
Thank you, Johnson, and welcome everybody on this call. So I'm going to make a quick overview of the results of the second quarter of P, which was the first one that giving us a positive net profit for the quarter, which is quite a milestone. Like Johnson said, there was a lot of transaction going on, and the good news this quarter is that we have a platform called Go River that is set over the lending business hub, and it started again in the second quarter that was impaired 2 years ago. So we were able to revamp and restart this business that is set over the the lending business platform and give us a good revenue for the month. So the 30 million revenue for the month, you can break it in between supply chain and the rest of the business. So ASFC, ASCS, that give $2 million in revenue, and the rest is coming to supply chain. So we have two main subsidiary now that is doing supply chain business. We have service fees from them, and it was accounted for 28.6 million in the quarter, which is amazing. And the good news, the new business that the new subsidiary that we put in under AST with the Gold River platform generate $22 million in the quarter. Then that's a really high thing to notice for the quarter. So 6.6 million from ASCS, the other supply chain service fee, and 22 million from ASST. So I think one thing to mention there is that we own 100% of ASST, and it's gonna be profitable. So it's 100% of profit for AST for Peak. And before that, ASCS, we have a company that we joined with us, and they own 49%, and we have 51%. So to transfer business to ASST is good for Peak in term of profit split. So the 30.6 million, 28.6 million from supply chain, 2 million from the other business, which is quite stable, profitable but stable. The cost of service to give service on the supply chain is 27.4 million. Please notice that the margin still low but increasing. So the average is 5.5% for the quarter versus 2 or 2.5% in the quarter before. So we're increasing, and ASST is aimed to increase their margin in the future, which is very good for the business. Obviously, the salary and fringe increase, if you compare with last year, not by double, but almost by double, with increase in the number of employees in China, in Canada, and some salary adjustment that we put in Q4 2020. And there's the share-based expense there that I don't want to get that in detail, but more the share price on the market is getting up, more the stock options that give to director and officer cost to the company, but it's not cash, right? It's just expense as per IFRS in the P&L. So that's explain part of the increase, but mainly we need some manpower there in China and Canada. The other thing on the other side, consulting fees. Last year, if you remember, we were looking to have a better view of Peak on the market, and hired some consulting to make that happen, and it's happened well, but it costs money. So we have an expense last year, mainly paid in share, but the cost is there. So this year consulting fees 118,000 versus 527, but last year was an exceptional expense, if you can say. Professional fees, well, with all what we're doing at Peak, it's normal that audit fees getting higher, legal fees getting higher. We hire some people, so we need some headhunter that help us to get some people on board. So that costs some professional fees. Expected credit loss, just a word on that. Reduction in it's a positive expense, so 10,000 versus last year 254. So if you remember, well, last year at the same time we were the start of the pandemic, and ASFC, our finance institution in China, had the extended payment, and we have to take provision over the payment of the loans. That's why we have a higher expense last year. That's not there this year, and we change a mix of products. So the auto loans go up, getting to change to real estate loans and credit loans, which is higher risk level. So we can reduce our provision, the provision over the expected credit loss over last year, and I think that's going to continue for next quarter and future quarter. So the reversal of impairment loss, I explained before, this is the Gold River platform that was impaired 2 years ago that we restart this quarter, so we're in position to bring back this asset, which is positive effect on the P&L for 193,000 for the quarter. In the adjusted EBITDA, we take that in consideration, which is a non-regular item, if you want. So that's a positive in the quarter. But even if you don't take that in consideration, the net profit will be positive for the quarter, which is the good news. We don't need to have this impairment reversal to have a net profit for the quarter, which is a very good news. So at the end, 30 million revenue, net profit of 296 positive. If you take out the 200,000 from the reversal of impairment loss, which is a gain, we're still positive at 100,000. Last year, same period, comparative loss of 538, which is a tremendous improvement. That's what my word on the P&L. Quickly, don't want to go to the balance sheet, but just notice that concerning the debt, Peak doesn't have any more debenture on the market. The last 50,000 that was up there was paid, reimbursed, and we continue to have, we're in the money on the market. We have some warrants on the market, and we continue to receive on a regular basis some cash from the investor to exercise the warrants. So they're bringing cash to the company, and it's good for the investors. That was I have to say regarding the P&L. We can go to the Q&A, and now we're going to be pleased to answer any question you have. Mark?
Yeah, thanks, G. So we got a bunch of questions here. I'll try to keep them mostly to about the quarterly results. The first one is about revenue. For the supply chain revenue, how much is charged by Peak and how much is passed through from other vendors? I'm not sure.
How much is charged by Peak and how much is passed through to other vendors?
From other vendors.
I'm not sure. I'm not sure I understand. Okay. So the way we provide our supply chain services is the following. So the clients come to the hub for financing primarily, and we bundle those financing services with other services that they may need related to the orders that they place, right? So let's say they place an order for $50,000 worth of product. We don't charge a fee for them placing that order of the product. We don't charge any fee. We don't make any cut or whatever commission on the product, but that product needs to be financed, right? So they don't have the $50,000. So we help them finance that product. We charge a fee for that. That product needs to be sometimes shipped, warehoused, or whatever. We provide a bundle service where we charge also for the warehousing and for the shipping related to the product. So we make money on the warehousing, the shipping, and primarily on the financing of that product. Now, what we pass along was the warehousing and the shipping was being done by not a subsidiary, but a third-party company called Rong Yutong. There's also logistics, by the way, also. So the system that they use to place the order was Rong Yutong system. Now we've replaced that with Gold River. So now instead of going to the Rong Yutong system where they place the order, they have logistics services, they go through Gold River. So we charge them a fee for using the Gold River platform to place the orders. For logistics, they need to be able to track their inventory, keep track of it or whatever. So we charge a bundle service fee for all those services. Now before, the warehousing, logistics, and shipping was passed on to Rong Yutong, and that was the cost of services. Now, the vast majority of those services, other than the shipping and the warehousing, is done by Gold River. So that's where we're reducing the expenses related to our cost of providing the service, and its intercompany fees. Whatever Gold River charges us gets canceled out, and we only report the net revenue and the expenses, essentially. I hope that answers the question.
Sounds good. This is a good question. So in the MD&A, you mentioned several countries specifically you want to enter by, Peak wants to enter by the end of 2023, including US, UK, France, and Brazil. Can you just expand a little bit on strategy? Like, why are you targeting these specific countries, what you see?
Okay, sure. First of all, US, we're a Canadian-based company, right? So other than China, the most important market for us going forward will be the US. So what we're doing in Canada is we want to launch here first in Canada. We already have, I'm talking through Cubeler. Once the transaction closes, again, I'm talking as if the transaction is already closed, but once that transaction closes and we do acquire Cubeler, Cubeler already has financial institutions, small businesses registered on its hub here in Canada. So it's going to be fairly easy for us to get started with Cubeler. That's why we expect to launch Cubeler's operations and start to generate revenue with Cubeler before the end of 2020. Now, once that's done, we operate Cubeler here in North America and Canada for a couple of months. In parallel, we're going to be working on setting things up for the US, really understanding the rules and regulations. We've already started to do that, and we're hoping to be in the US by the middle of next year, call it the second quarter of next year. Now, when it comes to the other markets, the UK and France, we've already had interest shown for the concept in the UK already and in Brazil. France is just, Quebec here, we speak French. So France is another important market. Since we're already bilingual here and the platform's already bilingual in Canada, it's going to be English and French. It's not going to be that difficult for us to get into the French market as well. So that's the reason why we've targeted those the specific markets.
Makes a lot of sense. Thanks. In regards to back to revenue, in terms of Union Pay, we mentioned doing 300 million of transactions in June. What does that trickle down to in terms of peak revenue fees?
Listen, it's when you deal with some of these big partners, they don't necessarily want you disclosing, and that's why we're like, we're being very careful when we're talking about dealing with JD.com, Union Pay, or whatever. They have other clients as well, so they negotiate certain rates with us, and they don't necessarily want that information to be in the public domain. So that's why we stopped putting that information specifically in our news releases, how much we earn with each transaction. But just as a general rule, figure between whatever transactions we do with Union Pay, figure between 1 and call it 2.5%. So it's within that range.
Okay, very good. Another question here. This one on stock options. Someone noted that it appears that we're regularly issuing about 1 million shares and options per quarter. And can we comment on, do we expect that to continue?
I'll turn it over to Jean in a minute because I'm not sure about issuing stock options. We don't have anything specific where we say, okay, this quarter we're going to issue X number of stock options. We usually issue the stock options based on performance, special circumstances, that kind of stuff. But I couldn't tell you, Jean, how many we issued last quarter or what we plan on doing in the future.
Well, we just issue with mainly in the peak history, we're issuing to stock option to director and officer once per year. Like this year in June, every May, June, or July of every year, we issue stock option. Exceptionally, last year we issued stock option with some milestone that was attained in October, and under that, if we hire new key employee, we're going to issue some stock option, with really minimal. So, in the history of Peak, it's really an annual stock option that we issue in the same time that we're doing the annual meeting. So there's no other pattern than this one.
Gotcha. Okay. Yeah, I got some people asking or noting in the MD&A section that about regards to the U.S. financing, and if we can provide any kind of context in regards to size of that, working with Benchmark.
Um, that's a good question. We're
Yeah.
talking about a base shelf prospectus, right? With benchmark. So perhaps just a quick note on what a base shelf prospectus is for those who are not familiar. Uh, a base shelf is where it is a prospectus offering. You file it, but you set a maximum amount, and you have 25 months, which is a little over 2 years, to raise up to that amount, right? So initially, we talked doing a specific amount with benchmark, similar to what we just did with Research Capital here in Canada, and we were talking about 30 million US dollars. But there appears to be quite a bit of interest for the stock from Benchmark and their clients. There are other potential investment banking firms that would be interested as well. So that's why we've changed our strategy, and we're thinking about filing a base shelf prospectus. Now, what that amount is that we would be raising over the next 2 years with this base shelf prospectus, we have not determined that yet. We're still in discussions with Benchmark and the other investment bankers that are part of this syndication to determine what the amount will be. So by filing what's interesting is that by filing the base shelf prospectus is that you don't have to keep filing a new prospectus each time you need capital. One thing I want to mention though is I don't know if the reason for the question is because of concerns of dilution or whatever. We get that. We realize, we're a penny stock company. I still say that we're a penny stock company and people are concerned about dilution, but really we have an opportunity here to really step up and get to be known internationally as a fintech company, a business hub that has an impact on business in the markets where we operate. So that's going to require some capital. So obviously, the company's market cap has grown tremendously over the last year. It's going to continue to grow, and anything that we do in terms of financing will be accretive, right? So we will bring value to our shareholders. We're not raising capital basically just to raise capital and I don't know, pay high salaries or whatever and stuff like that. We're planning on growing the business, and anything that we do will bring value to our shareholders. So regardless of what the amount ends up being, it will be to the benefit of the shareholders. That I can say.
Excellent. Thanks, Johnson. Can you talk a little bit about retention rate of the SMEs in China on the hub and reoccurring loans? Just go into that a little bit for the second quarter.
Yes, as I mentioned before, the hub has been growing. It's grown tremendously over the last year. This is not a lending hub only, so to speak, right? This is a hub where businesses sign up to conduct business. There are a lot of advantages to being part of this hub. So it's not like a small business will come in and let's say they need a $50,000 loan or whatever. They sign up, they get their loan, and they leave. No, there's stickiness to the hub. So they come in, they interact with other members of the hub. There are other benefits, as I mentioned before. The payment processing that we do, the fact that when they make sales, they can get paid a lot quicker than if they were outside of the hub is just one advantage. The other advantage is basically just networking with other members of the hub. We're going to implement very, very soon the ability basically for them to actually advertise their products or services to other members of the hub. So there are a number of reasons why businesses have an advantage to stick around. Now, in terms of retention rate, there's been very, very little attrition or whatever, people leaving the hub. For the most part, once they come in, they stick around. And as we continue to provide more services, we're talking about providing insurance. There are other services that we're going to be providing later on down the line. So there's just going to be more and more reason for people to stick around. So there's not been that much turnover, if you will, in terms of members leaving the hub.
Awesome. Okay. From the overall revenue picture, can you kind of break down, if possible, the concentration from JD.com related customers that we've been processing?
Okay, that's a good question. From Jean mentioned that the supply chain business that includes the distributors, retailers, the program that we implemented specifically for JD.com clients. That business generated, if you take that aspect of the business, that generated about $22 million. So that was the biggest revenue generator. I have to say for the last quarter, because of 618 and the popularity of those programs on JD.com, out of that $22 million, I would say about 60 to 70% came from was related to JD.com.
Yep.
Okay. Okay, and a bunch of people are curious about how you're going to get to 100,000 SMEs by the end of September. Like, can you just articulate the growth strategy a little bit and how you expect that to ramp up, and like, if possible, for Q4 as well?
Sure. Listen, as I mentioned before, the information that's on the website right now is a little bit misleading because, again, the website is mentioning about like 30 some. So I haven't been to it today or whatever, but it's 30,000 small businesses, somewhere along those lines. But as we speak today, we have not updated that information. But as we speak today, we have an excess of 70,000 small businesses right now that are part of the hub. So that information needs to be updated on the website. Now, as far as how do we get from 70,000 to 100,000 between now and the end of September, let's say. Just onboarding a lot of the clients on ShopeX. There's a lot of clients being referred to us by Wrong Bank Technologies. Obviously, they have a lot of clients because of the relationship with China UnionPay. So we expect the ramp up to continue throughout the month of September. So if it's not by the end of September, certainly at some point in October, we expect to reach 100,000, that milestone, 100,000 small businesses that are part of the hub.
Okay. Any comment on what percentage sales in Q2 were tied to Shopex?
To ShopeX, very little. ShopeX, we started to onboard them, but we have not started the marketing campaign yet with ShopeX to let them know exactly the benefits of the program. So that's something that we expect will kick in either in Q4 or first quarter of next year. But we are onboarding the clients right now.
Okay. Alrighty. Well, Johnson, a lot of questions about Nasdaq, as you can expect. A lot of others about forward-looking, but we don't necessarily need to get into all that. So we'll wrap up Q&A at this time.
That sounds great. Listen, I understand the concern about Nasdaq. Like I said, send an email to Barry. Barry, I'm sorry to do this to you, but send an email to Barry if you're interested in getting T-shirts. Because listen, I want to be clear about this. Nasdaq is happening. We expect to make an announcement this week, and if we can get those T-shirts made, we may have some kind of whatever, like fun contest or whatever, where people can sign up for a chance to win a TNT Nasdaq T-shirt.
Excellent.
Okay, so if that's it, do you want to send it back to Barry to wrap up, or any more questions you want to address, Mark?
No, I think we're good, Johnson. Yeah.
Okay, terrific. Listen, before I turn it over to Barry, once again, I want to thank everybody for taking the time here. It's the middle of the day. The markets are still open, so very, very appreciative that you guys took time out of your busy days, whatever you're doing, you're working to be with us today. Appreciate it, and turn it over to Barry. We're looking forward to continuing to build the company. And once again, thank you for your support. Barry?
Yeah, thanks, Johnson. Those were really good questions. And I could reiterate too, thank you for a very, very strong attendance. I think it's one of our I think it is the highest that we've had. So that's great. I mean, that's a good sign of interest. Peak is just becoming so much more of a greater interest, and to all the good points. My inbox is on fire, so thank you for that. Yeah, they just keep coming in. So yeah, I'll get on that. And like I said earlier, so this has been recorded, so it will be available later, and we'll also have written transcripts for those that actually prefer to read this session. So with that, I'll close down this session, and we'll see you next quarter. Thank you very much.